Bitcoin, the phoenix that has arisen from the ashes, climbing out of the $3,000 level all the way up into the $5,400 region. Currently, we still are holding that $5,000 level, but the question now becomes, are we still on the trajectory to test that critical $6,000 level? Or right now, with the new weekly candle painted in the chart here, are we looking at a retracement, a decline, and a plunge deep down into the crypto abyss? What is going on, ladies and gentlemen? Crypto Kirby here, your cryptocurrency expert, back with another edition of the daily live stream. What is going on, my friends? Today I'd like to discuss Bitcoin, and with the new information we have not only here on the chart but on the Google Trends data, the Crypto Fear and Greed Index, the total market cap, Bitcoin dominance, etc., etc. I want to crunch a lot of data here and really dive in. Are we still looking at what appears to be a sustainable uptrend, or are we more likely to be facing a rejection sooner rather than later? And as a full-time trader, I'd like to discuss with you my strategy, my game plan, and how I plan to crush this market right now in the immediate term. So without any further ado, you guys already know the deal. If you like these daily crypto videos and nightly live streams, smack that thumbs up button, click the subscribe, tick the little bell, and let's get this crypto. Moon the likes, ladies and gentlemen. Moon them up. All right, so we'll begin with our Bitcoin technical analysis. And of course, before we begin, this is not investment advice. This is not trading advice. These are only my own opinions, ideas, and observations on the market. Always do your own research and your own due diligence before investing or trading, as this market is extremely high risk, and I am not your financial advisor. I will never tell you what to do with your trades or investments. Being said, let's begin here on the weekly time frame. Right now, the BLX, guys, this updates once per day, so we do not have today's morning volume here, but this is the candle that was closed last night for the weekly time frame. As we can see here, clearly last week was an epic green lightsaber of glory up into our red resistance box, which was the expected level of resistance. Furthermore, we travel into the previous week where we just closed now. After a week of extreme volatility, ladies and gentlemen, a lot of choppy action in here all along the way, we closed the week out at a complete doji candle. Now, this does raise some concerns for me here because, as you guys would know, if you are subscribed here, I've talked about it in the past. Doji candles are very indicative of tops. Now, they don't have to be. There are generally some times where they don't have to be, but a lot of the time, these can signal a top. Now, let me explain the psychology behind it. A doji candle is a very indecisive candle, right? That you could see we wick on both sides and close right in the middle of the candle. This shows complete indecision in the market. And this is over a week of trading. So this is a lot of data here. 7 full days of trading crunched in here. And the bulls and the bears are at a complete stalemate. So generally what this is indicative of, ladies and gentlemen, is that we are at a level right now where indecision should play a role. And why is that? If we go into the daily time frame, we can clearly see I've had this red rectangle of resistance painted here in the chart for quite some time. This is just a classic level, ladies and gentlemen, where we found support on our descent into the crypto abyss on our original capitulation, which now, per classical technical analysis theory, should become a new resistance, not only to human traders, but to algorithm bots as well. And we did see our clear rejection off the level that was intended to be a rejection point, right? Also, right now, I want to pull up the RSI, okay? Here on the daily RSI, ladies and gentlemen, we still are at extremely high levels. We are currently exactly at a 70 at the time of recording. We are in complete overbought territory. We've been in complete overbought territory, and we are still flirting with that level right now. I mean, not for nothing, we've been on a straight parabolic rip here in the RSI all the way back really from let's see the exact number. November of 2018 was when we hit our ultimate low here. The RSI was completely oversold, guys, at a 10. Sheesh, a 9 rather. Sheesh. We've been on a straight rise since then. But as we can see, just on the contrary of what happens when you get completely oversold, right? What do you think has the possibility of happening when we're completely overbought, right? So as we go back in history here, look at all the times that we've been in complete overbought territory. We'll actually use a rectangle here just to make it, more clean, so we can see that these peaks are all very, very similar as to where they were. And if we use another rectangle to see where did these wind up at, right? The large majority of them wound up in the same area. Let's draw this box here, and we can clearly see that many of these RSI lines went all the way down to touch this box here, which is in complete oversold territory at about a 30, right? That's out of the 1, 2, 3 times that we touched, they all absolutely went to touch that area. Now, this doesn't mean that has to play out like that, ladies and gentlemen. Of course, past performance is not indicative of future results, but this is something that I'm watching right now, as it is going to tie in with our other data that I'm going to show you here in a moment with Google Trends and the Crypto Fear and Greed Index. But right now, the daily RSI is concerning for me. As we could see, ladies and gentlemen, the RSI is still overbought at the time of this analysis. We obviously see where some of these prior overbought conditions have sent us down to, and that is something I'm looking at. Also keeping it intact here with the doji candle coming up on the resistance, signaling to me that it is apparently a level of massive indecision at a level that we would expect rejection in the price action, also coupled with the RSI, also, ladies and gentlemen, coupled with the NVT, right? Do not lose sight of the NVT. The NVT indicator is measuring Bitcoin transaction volume on the blockchain. And throughout history, time and time again, ladies and gentlemen, time and time again, we've seen that after multiple touch points on an upward sloping trajectory, once we've broken this, we retest, cannot recover, and it has signified a dump. Right now, we are in a red territory once again. And once again, are we flirting with this support trend line? I'm not going to get too worried about this until this line is broken, because if we bounce at this level right here and continue, I see no reason, in my opinion, to get worried about it at this moment. But you best believe if we do break through here, Don Carbonaccio is going to be looking to take advantage of an indicator that has been 100% correct throughout Bitcoin's history, dating all the way back to 2012, ladies and gentlemen. Savage, heinous, and a borderline ludicrous amount of trading data here that has just proven time and time again to signify the tops here. So I'm not letting this get off my radar as well, with the confluence of indicators that I've shown you already: RSI, price action, NVT, the doji candle close on the weekly, etc. I'm seeing a large amount of data here to suggest to me that we may be due for some type of correction here in the near term. And of course, guys, as we all know, we can use our Fibonacci retracement here, as I love to use these as well. We'll start it from right here. Reason that we'll start it from right here is because this was the swing low, right? This was a swing high to swing low, and now we are currently still on the swing high of this trend, right? So we're going to use our Fibonacci retracement from this swing low to the current swing high. And what do you know, ladies and gentlemen? Like clockwork, a work of beauty right here, we see that our very nice retracement Fibonacci levels line up completely with the top range here that I've had in this red box. Now, this level is all of our prior tops that we made in that bearish structure down here that we could not get out of for a while, right? This red box indicates all of the tops, and those tops previously were resistance levels. So now, in theory, per classical technical analysis, these levels should start to act as new support, rather. Excuse me. These levels as old resistance should now act as new support if tested. And to add some more fuel to the fire here, we now have two Fibonacci retracement levels, with the 0.618 being one of the most beautiful retracement levels in the whole thing, lining up directly with this territory. So for me, ladies and gentlemen, if Bitcoin is to retrace, which I see with the confluence of indicators that I've been outlining here, is probable in my opinion. The silver lining here, which is still beautiful from a macro bullish perspective, is that this level is looking like somewhere that we are going to find support, in my opinion. Maybe it doesn't hold, right? Nothing's perfect, but for me right now, just like I'm seeing a confluence of bearish indicators up in this range that are signifying to me that we may be close to a top here and ready for a potential correction to the downside, I'm also seeing a confluence of indicators down in this region here that signify we may actually find that support and continue our bullish rally after what could be a healthy pullback, right? And this could wind up looking like a BART pattern, ladies and gentlemen. You know, we haven't seen one in a while, but it's possible that we're just waiting for another BART to come in. And of course, ladies and gentlemen, all these moon boys, you know, look, it's a bird, it's a plane, it's Poopcoin Patrick. They're all gonna cry once again, ladies and gentlemen. They'll all be crying a Don Carbonaccio. Oh, Kirby, you know this. Oh, Kirby, you know that. What I'll tell you right now, James, what I'll tell you right now, Joe, is that this market is going to crush you from time and time. That's how this works, right? So let's say that you were being a moon boy, right? Let's say you bought at a weird point in here off of some FOMO and it ripped up. It's your responsibility, James. It's your responsibility, Joe, to understand that markets move up and down, right? Maybe you did buy the bottom here, right? Say you bought this bottom and it went up and then we go down again, right? How do you feel now? Horrible. I guarantee you that many people did catch the bottom and then wound up selling at the bottom once again out of pure panic. The thing is that when you're a trader, right, I want to just briefly go down this rabbit hole before we go into some more metrics here to validate why I believe we could be reaching a critical area of rejection and correction for us. But let me get down this rabbit hole first. So all this week, ladies and gentlemen, last week, the whole time, I keep getting that you missed the bottom, Kirby. You missed the bottom. As a full-time trader, it doesn't matter if you miss the bottom. The risk to reward ratio when this is capitulating is not to buy the bottom and catch falling knives. You understand? So the thing for me, one, I shorted this, right? You guys know, my VIPs know, I shorted this whole thing, ladies and gentlemen, from the $6,000 region. I shorted many times throughout here, over and over again. The moon boys kept telling me to get wrecked. You see, Kirby, we're moving sideways. You're never going to win, Kirby. Stop shorting, stop doing analysis, Kirby, oh. And they all get wrecked. I don't even see those people anymore. I actually had one guy come back and try and criticize again. I was like, man, I haven't seen you in months, man, because you used to badger and berate me when I was shorting up here, and now you come back and think I forgot about you when we're climbing back up. Get out of here, you troll. Get out of here. But the thing is that the bottom doesn't really matter, right, if you're trading, because the risk to reward ratio, guys, was not there to catch knives at the bottom. And then just be honest with yourself. If you did buy that, you would have been absolutely in full panic mode when we drop back down here, because when you test up and get rejected after a massive capitulation, are you feeling good right now? Why would that have to be the bottom when we could have been looking at another drop into this region down here? So the thing is, guys, is that as a trader, catching the bottom is ridiculous. Actually, theoretically, how full-time traders trade the large macro trends of things, like I'm talking like even monthly candles, like I'm talking long-term trading, theoretically, waiting for a confirmation of a bull market and then buying in is theoretically more successful than buying a falling knife and trying to catch the bottom when you have no indication that the bottom must be in, right? The only indicator at that time that was suggesting that the bottom maybe could be in was the 200-week moving average. And if that didn't hold, I mean, think about the wrecked city that these people would have gone to, right? Think about if that doesn't hold, why would we have to stop there, right? So now that I'm done with that rabbit hole, we'll get into the rest of the analysis here. I just want to make that clear that a lot of people in this market don't truly understand that that was such a risky place to be buying the bottom at. Could you have taken maybe a long trade off the 200 weekly? Sure. But I just want to be clear, guys, is that the bottom is meaningless, because what happens is that throughout these ranges, there's going to be many opportunities, both long and short, from here on out, right? If this is the bottom, great. If it's not, great. It doesn't matter, right? It doesn't matter if we drop down this far. It doesn't matter if this was the bottom and we begin upwards. There's opportunity for all of us in each direction. So don't get caught up with missing things. It doesn't matter, right? Does not matter. All right, end rant. Let's move forward with some more data here to really combine a confluence of chart data and other social analytics to get the full picture going on here. But if you are just tuning in now, don't forget to moon up the likes, moon them up, smash those thumbs, click the subscribe button, tick the little bell. Let's get this crypto. Satoshi needs a new pair of shoes. And briefly, just before we go into these, another thing to look out for, ladies and gentlemen, is we are getting our doji on the weekly just underneath the 50 moving average on the weekly. I forgot to mention that. Just another indicator inside the chart that is giving indecision to the traders right now, which is still leaning me more bearish than not. Also, right now, Bitcoin dominance is back to nearly 52%. At the time of this analysis, we are at a 51.8. That is why the altcoin market right now is juicy, ladies and gentlemen. We're seeing a lot of green here, but the way that I'm viewing this, if you're unfamiliar, right, if you're subscribed here, you would know that I cover this often. Bitcoin dominance, when the market starts to tank, Bitcoin dominance starts to rise, right? As we see the altcoins capitulate and liquidate into Bitcoin, mostly because a lot of the smaller altcoins that are down here on the list, they don't have stable coin pairs or fiat pairs. They only have Bitcoin pairs, right? So you see a lot of smaller cap coins liquidate into Bitcoin, thus rising the Bitcoin dominance level. And that also can be an indicator that the market is getting ready for another move to the downside. And as we can see, guys, for the past several days now, we have been on a steady incline. Although the market as a whole has gone up, I'm still very cautious right now, guys, because this has been an indicator that has worked historically over and over again to see the shift in market sentiment from extremely high risk in altcoins to kind of taking some risk off the table, going back into Bitcoin so you can be ready to unload into fiat or stable coin if necessary. Watch the incline in the Bitcoin dominance. I'm watching it. I see it. It's also another warning sign for me here. Another one, ladies and gentlemen, Bitcoin on Google Trends. This is worldwide data for the search term Bitcoin on Google Trends. As we can see, ladies and gentlemen, what we have here is the past 30 days. So Bitcoin 30 days ago, this, by the way, obviously here was when we had our massive $1,000 candle in a half an hour, right? So we could see that we had our peak was right after that candle. So let's take some data from before then when Bitcoin wasn't going too crazy, right? We'll say for the sake of this, we were at a 35, right? That's about the average spot that we were at, 35 relative to the peak here at 100. And we've retraced quite significantly, ladies and gentlemen. And over the past week, we are significantly declining, right? We had our massive decline, a short spike, but then after April 8th, we've gone from 64 to 57 to 56, 57, and now 51. It appears to me that just like the indecision we've seen here in the doji candle, we're also seeing that the lack of interest in search terms for Bitcoin is falling off as well. And this is just in the past 30 days. So this is a clear representation, because if we go back to only the interest levels and search volume as we were from before the candle, we can clearly see, guys, that the volume here was very low. The trade volume was very low. So if we go back to that level of interest in the search volume and the volume on the trading was that low, for me, ladies and gentlemen, this again is a level that I'm seeing that maybe the speculation to the upside has ran out of gas. Does it have to be? No, it's only my own observation and opinion. Again, this is not investment advice. This is not trading advice. I'll never tell you what to do with your trades or investments. I'm just seeing a lot of confluence here that this market may be due for a correction, and it can still, this is the takeaway, ladies and gentlemen, as long as this level holds, the Fibonacci retracements and this red box here, if this level can hold as support, I still believe we could be long-term bullish now from a macro perspective. Another thing to look at here, guys, is the crypto fear and greed index. We are still in a greedy territory, ladies and gentlemen. The thing for me is that we can clearly see from this chart here, when we dump from this metric, right, when the fear is very high, or excuse me, when the greed is very high, generally the fear goes down below 20. It's in the teens generally, right? All low 20s and teens. We see it when it dumps over and over again. Over and over again. Do we see that this loves to go from extremely greedy to extremely fearful? And there's not much in between. You don't generally just see a little blip. Most of the time, it's a significant fall off, right, in dramatic fashion. And right now, we haven't had that dramatic fall off yet, and we've remained in a greedy territory for the past several weeks here, and especially over the past several days, more in particular. So for me, ladies and gentlemen, I believe from this metric as well, I see potential for a dramatic correction here, just like we've seen time and time again. I'm just looking at past patterns, right? And generally these patterns love to repeat themselves because human emotion does not change. That is why markets are cyclical. That is why technical analysis and market analysis is so it's so accurate historically, is because we're measuring human emotion here. Yes, it's candles. Yes, it's indicators. Yes, it's this. Yes, it's that. But at the end of the day, what we're analyzing is human emotion. That is what this all boils down to. And if you can understand human emotion, that is what will allow you to crush this market. Guys, I'm ready to trade this aggressively. I hope you see right now, this is like a proverbial powder keg, absolutely ready to explode. I think I've given you today, guys, so many confluences in indicators of what I'm seeing here that this could potentially be close to a top. And if it is, you shouldn't be scared, because the trading opportunity in here, look at the percentages, ladies and gentlemen. If we just retrace down into the support zone with the Fibonacci's and the prior highs, we're talking about a 25% move in Bitcoin, which may even be a larger swing in the entire market as a whole. There's going to be potentially life-changing opportunity, in my opinion, and you best believe that Don Carbonaccio is looking to take full advantage of this swing if it does in fact occur. And what I've shown you all today, ladies and gentlemen, is why I believe that we see the case here for a potential large move looming here. Everybody's there. You're allowed to all have your own opinions, right? This is only my opinion. The thing is that I let the indicators, the trends, the patterns show me what is probable. I also like to show extra analytics here from outside sources to further validate my analysis here inside the chart. And what I'm seeing, guys, is that for me, I think I'm still looking at this with a bearish bias. I still see that a correction is likely here, in my opinion. And the key word again to take away from this, is that this, in my opinion, if we do retrace to this region, is still potentially macro bullish if we do hold this level, consolidate, and look to retest. Because if we retest this level and break out, then consolidate here, we are in fair territory to look to test and break that 6,000 region. And we all know, if that happens, ladies and gentlemen, grandma's cookies and a bottle of yo-ho-ho, this thing may in fact be ready for the moonshot that we've all wanted and craved for quite some time. Let's get this crypto. Guys, I hope you've enjoyed this here. If you could, moon up the likes, moon them up, smash those thumbs, click the subscribe button, tick the little bell. Let's get this crypto. Right now, I believe we're potentially waiting for a Bart Simpson, ladies and gentlemen. I believe that we may be waiting for something that looks kind of like this. Right? I honestly believe that we are in fair territory for that. And in order for it to go against what I'm seeing here with my bias from the amount of overwhelmingly bearish confluences I'm seeing in this vicinity, I'm going to need to see further candles here. As of right now, it's an overwhelming amount of bearish indicators. I'm going to leave it at that. All right. Again, that is only my own opinion. Always do your own research and your own due diligence before investing or trading, as this market is extremely high risk and I am not your financial advisor. I will never tell you what to do with your trades or investments. Guys, I'm personally going to be trading this very aggressively. I'm waiting for the time to strike. I'm personally not short anything right now. I am not in any positions right now. I'm awaiting to take my positions. I'm ready to strike like a cobra out of the grass and get this crypto. Ladies and gentlemen, I will be keeping you up to date with my trades in real time. I post my trade alerts in real time when I take my trades. Every entry, every exit, every target, every strategy, every take profit, exclusively for you in VIP. I will see you in VIP right now. I will be posting my trade alert when I take my trade. I'm ready to crush it. I'm ready to get this crypto, and I'm ready to seize upon potentially life-changing opportunity if it does in fact arrive. Ladies and gentlemen, let's get this crypto. I will see you in VIP right now. Shout out to my VIPs. Guys, if you could, moon the likes, moon them up, smash those thumbs, click the subscribe button, tick the little bell. Let's get this crypto. I'm fired up and I'm ready to get it. I will see you in VIP right now. Shout out to my VIPs. I will see you in VIP right now. And until next time, my friends, be safe, be happy, be healthy. It's your boy, Crypto Kirby. Peace and love, my friends. Curbs.